I love buying calls. Even when the market's going down, baby. I love buying calls. YouTube. YouTube. What it do? It's Little Petty coming back at you guys with another stock market episode. And in today's episode, you guys, we are going to be talking about how I turned $74 into $1,600 in 2 months swinging Facebook options. Yes, you heard it right. $74 into $1,600 in 2 months. So, without further ado, we're going to get into this lesson/episode. And as you guys all know how we like to start this market or these episodes off, we like to start in the SP 500, looking at what happened in the day, and then we look at the visuals. But before we get into this lesson, make sure you guys go follow my Twitter. Links in the description. I'm posting all of my plays. I'm showing you guys what I'm doing. Like today, we bought a Disney 145 call, July 17th, 2020 for $56. So make sure you guys go follow the Twitter, and make sure if you guys are new, comment, subscribe, share. Sit back and stay tuned because we got a good episode/lesson that we're going to give to you guys today on Thursday. All right, so as you guys see right here, the S&P 500 is still holding this uptrend. We had a small down day of 0.69% on the day. The bears look like we're still going to be getting squeezed. And I actually dropped something on my Twitter today saying, if SPY breaks 292, watch out for the gap below at 286. Bears could be getting sucked in right now before SPY hits 302. So we're still basically looking bullish on the market. Like I said, until we get this cross or if we come fill this gap. But every pullback has basically been a dip buy scenario. So until that happens, I'm bullish, and that's where I stand at on the markets. SPY 302, we're looking out for that, and possibly SPY 315. And like I said, so let's go ahead and look at the market visuals today. As you guys can see, basically everything was down today. Not too much was up, a couple earnings plays, but besides that, everything was going down for the most part. The Russell was the strongest. It was leading the way. And yeah, but without further ado, let's go ahead and talk about this Facebook play. And we're gonna give you guys a lot of information and insight on this, how I set it up, what I was looking at, why I wanted to swing trade it. And swing trading options, they give you more of a leverage to actually make more money, because if you're day trading, it's going to be pretty hard to get a 1,800% gain on your money in day trading. So that's why I like to swing trade. And if you guys sit back, stay tuned, you guys will see in this video, we'll break it all down. So let's go ahead and pull this up. So as you guys can see right here, we got this, we're going to pull up the Facebook chart. So we're going to pull up the Facebook chart. This is the 3-month 1-day chart, but we're going to actually go to the 1-year 1-day. So we got the 1-year 1-day. We'll look at this first. And then over here, we got the options table right here. And then we have the option, whatever option we're going to be looking at. So to start this lesson off, on March 25th, if you guys go back to my YouTube channel, I got the Little Petty Buys a Dip. I talk about buying the dip in the stock market when the stock market is at the lows. So, but on March 25th, we was like, okay, we're going to buy some Facebook calls. And the reason we ended up buying those Facebook calls is because we seen potential that the stock market was going to bounce and that there's potential for certain stocks to make all-time highs. So that's what we did. We ended up buying some Facebook calls. So on the 25th of March, we came out here and we were searching, we were looking for calls. And the calls that we ended up buying were, we came to the January, so we wanted to get time. So when you're swing trading options, time is going to be on your side. And especially when the stock market has pulled back so hard, this is going to give you an opportunity to look for calls that were close to the money or that were already in the money to make a profit. So first off, we'll go to this January 21st, this January 15th, 2021, 260 call. So as you guys can see right here, we bought it on this candle So this day was on 325, and we bought this call option when it was trading around 74 cents. So when I was looking at this, as you guys can see, this is what the option that did. We had this massive pullback. I'm like, all right, well, these options were going for about 12 bucks. We can, spend 50, 60 bucks, buy some calls. So we bought one of these calls, and then we also bought the June 19th 205 call. Now this one's in the money, and if you guys look, so we bought this one for $1 and we sold it for $2.98. And if you guys see, we left some money on the table. This contract was about $32. So about $3,000. We left about $2,700 on this table. But the reason I sold out on this was it was more just as the stock was going up, we wanted to take profit. So we ended up scaling out of our options. And so just basically we wanted to take some profit along the way. So, but let's dig into this. So back to on the 25th, I was looking at the stock. So the stock was trading on the 25th. It was trading in this candle. So we were approaching the EMA. So I'm like, okay, we're getting close. It looks like we're about to cross. Let's go ahead and get some calls. So we ended up buying the call on this day when the stock was trading at about 163 to 153. So we were saying that yes, Facebook in the next year, we see potential of Facebook stock making basically an all-time high or coming up and testing these all-time highs. So that was, but the risk, the way I'm looking at it is the risk was very, very small, and the upside is very big. Because if you look at the chart, so let's go back to that June or that January. So, but if you look at the chart of the options, you will see that there's potential, so that's why we basically put on that trade. And so we ended up closing that trade out today, and we basically took the money. We did not want to hold for the extra 239 days. Now, the reason we wanted to sell out of this was basically Facebook had ran up so much. We do still have a lot of time on these contracts. Say if Facebook stock runs to $320, these contracts will be worth, maybe $10,000. But the way I looked at it was, okay, I just wanted to take the profit. I wanted to secure the bag, and we can always go back and basically buy if we get another dip scenario. So that's basically the trade. There was a couple other trades that we did take. Like I said, that 205. Now on as the stock was going up, so let's dig into this chart. So the stock was grinding up. The option was grinding for about a couple weeks, and it finally started to make some traction. So it went up to about $4, came down to $3, then it popped up to about $7, and it was going up even as the stock, the stock was going up, but on down days, the option wasn't really coming down that much. So I'm like, okay, we're holding our value. Then the stock leveled out at about $5 a few days ago. And then when we got this news that broke it out, that's what broke it out. So that's where I was like, okay, let's go ahead and lock in the profits. So that's what we did. We locked in the profits, and then we ended up turning it into shares. So the other play that we ended up buying on May 7th. So let's go look for May 7th. So on this candle right here, after we had already been in a couple of the plays, we said, you know what, we got the cross. Now let's go ahead and average down or average up into the play. So we ended up going out to the September 15th or the September 18th, 2020, and we bought the 225 call. Now, if you guys could see, we bought this on this day. Shout out to the trading fraternity. The code, baby, the code. So, So on this day right here, on the 7th, we bought this contract for $155, and we ended up selling it out for $6.20. So it was a quick swing trade, but as you guys can see, because Facebook stock ran up and these still have time, these contracts shot up to $26. So like I said, we did leave a lot of money on the table, but at the end of the day, we took our profits, and we turned all of our profit into shares. And that is the key. So I want to show you guys right here. So we're going to come to my main account. We'll show you guys, this is all of this. So we bought the 260, 74 cents, the 205 for $1, the 225 for $1.55. Then we sold out of the 205 for $2.93. We sold out of the 225 call for $6.20, and then today we just sold out of the 260 call for $16.35. And every time that we sold out of our calls, we bought shares of the stock with that money. So overall, if you take the 3 trades, we basically traded $329, and we turned that into 11 shares of Facebook stock. That's how you guys swing trade options. That's how you can basically leverage your money. You take a small percentage of your money and you put it into options, and then you can leverage your money for profits. And then what I did was I took my profits and turned it into shares. So as long as Facebook stock keeps going up, I still make money. If Facebook stock pulls back, my average buying share is at about, I think it's about 79 or 179. So it's all a win-win scenario. We could have had more money, but at the end of the day, we want to manage the risk. So now back to the swing trading. So if we're swing trading, and if you're gonna swing trade options, you want to look for time, and we want to give ourselves a buffer, and that's what the time is. The time is giving us a buffer so that we can, we have wiggle room. So whoever sold us these contracts, these 260s, these 225s, they basically got burnt. Now, when you go back and look, it's like, yeah, Facebook stock came down to 150. Now this is basically a bear trap. Bears are getting squeezed. They're willing to sell these. This is ridiculous. They're willing to sell these contracts almost a year away for pennies on the dollar. And now look at them. They're gonna have to buy these contracts back for a really high price unless they hold on to these and these contracts expire worthless. So that's basically it for this video. I wanted to talk about the Facebook trade. I wanted to keep this video kind of short. But yeah, that's the benefits of swing trading. I do not like to day trade. I'm going to make a video of the 5 top reasons why I don't like day trading, why I like swing trading. And yeah, so overall, that's basically this video. I wanted to show you guys how you guys can take advantage of buying options at cheap prices. So even if we would have bought this 225, whoever I sold this contract to for $6.20, now if they're still holding that contract, they made a profit. So they bought higher and they sold it higher. Now, when we look at Facebook stock, if we look at this weekly chart, you can see we're about to get the weekly cross. So we're pretty bullish. We held these bottoms. These bottoms were pivots, and we could be setting up for another pivot, but I will be looking to buy a pullback. Say if we do come below under $200, I'll look to strike again on Facebook. But that's it for this video, YouTube. I hope you guys liked it. Make sure you guys comment, share, and subscribe if you're new. And Little Petty is out.